Namaskar. This is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. Ever since the government had announced last year that it proposed to introduce a bill to regulate cryptos in the then winter session of the parliament, but it failed to do so again, it was very clear that while crypto legislation will still take some time, the introduction of a Cbdc, which is a digital currency by the Reserve Bank, will not. And that's because while on one hand, many crypto-related investigations by agencies such as the Income Tax Department, Enforcement Directorate, EOW, etc., were resulting in the discovery of a rampant tax evasion, crypto crimes, and money laundering. The Reserve Bank, on the other hand, continued to favor a complete ban on cryptos and wanted the introduction of a digital currency by it. A deputy governor of the Reserve Bank had in fact mentioned last year that a Cbdc, which is a central bank digital currency, was expected to be introduced by it sometime by mid-2022. That was an enough indication. And that's just what the FM did in the recent budget. She said in her budget speech that the introduction of a Cbdc will give a big boost to the digital economy of India. Digital currency, she said, will also lead to a more efficient and cheaper currency management system in the country. She therefore proposed to introduce Digital Rupee using blockchain and other technologies to be issued by the Reserve Bank of India starting financial year 2022-23. She also announced a slew of income tax regulations in the matter of taxation of gains on crypto trading, taxing them at the rate of 30% and treating such gains at par with the taxation of income from any speculative transactions, thus refusing to permit the set-off of crypto losses against any other income of the taxpayer. To quell the jubilant crypto investors who inferred the proposed crypto tax provisions to mean that cryptocurrencies were being legitimized in India, she said in a post-budget press meet that taxing crypto gains did not necessarily mean that the cryptos are being accepted as legitimate by the government. To make it even more clear, the Finance Secretary T.V. Somnathan said emphatically that crypto will never be legal tender and that only the digital rupee of the Reserve Bank of India will be the legal tender in India. The government thus ruled out very clearly that we are not going to have a cryptocurrency other than one which is being issued by the RBI. Let's see who has spoken what about crypto and Cbdc so far to understand its introduction. Notwithstanding the cult-like popularity of cryptos among speculators and those seeking quick gains, and despite the lingering uncertainty about their very legality, it was always very clear that the government would soon be introducing a digital currency to be issued and regulated by the Reserve Bank of India. The top babus of the government in their post-budget deliberations further clarified about the Cbdc and cryptos as proposed in the budget. The Revenue Secretary Shri Tarun Bajaj said first that the tax regime for virtual assets was proposed in the budget in order to address the lack of clarity on how income from such transactions is to be taxed, and it does not necessarily confer legitimacy or legacy on these products. He then said that regulation or no regulation, or whether we want to ban it or we don't want to ban it, that is not the revenue's concern. He said, we want our tax due on the gains made in respect of crypto investment or crypto trading. Speaking about the proposed introduction of the Cbdc, that is a digital currency, Shri Ajay Seth, the Secretary of the Department of Economic Affairs, said that legislative changes have already been included in the finance bill for amendment of the Reserve Bank Act for facilitating a digital rupee or a digital note which is based on blockchain technology. Whether it will be retail or wholesale, he says, it will be a matter of the Reserve Bank's preparedness. The beginning will be made in financial year 2023, he said. According to him, it will open up opportunities once available in the market, as it will create an entire ecosystem in order to build products and services around that. So digital currency in itself is going to create new market verticals according to him. Let's now see what the Prime Minister said about the digital currency. The PM said, with these announcements in the budget, while the crypto legislation is yet not decided upon, what it has, however, announced is the introduction of the digital currency by the Reserve Bank of India. And this national initiative is being pushed by no other than the Prime Minister himself. Addressing a BJP symposium, he said that the digital rupee will be the digital form of a physical rupee and that it will be regulated by the Reserve Bank of India. He then said that this will be such a system that will enable the exchange of physical currency with digital currency and vice versa. If anyone makes payment with digital currency, you will be able to change it back into cash if you wish to do so. He then said that the launch of Cbdc will make digital payments and online transfer of funds far more secure and risk-free, and it will boost the digital economy in the years to come. The Prime Minister said that this will lead to ease in the development of a global digital payment system, of which India will certainly be an integral and important part. He finally says that the digital rupee will revolutionize the fintech sector by creating new opportunities and that it will lessen the burden in handling, printing and logistics management of cash in the country, which the Reserve Bank does. Let us talk about the Cbdc, which will be introduced in India during the coming financial year. And let's do that in a question-answer format to understand the entire spectrum of what is now coming through. The first question, what is the Cbdc scene worldwide today? The Cbdc is a hot topic today, and banks, financial institutions and governments worldwide have undertaken research and pilot projects on the economic and technical feasibility of introducing Cbdc and its impact on their monetary and fiscal policies. Its introduction will need changes in the banking laws, changes in the payment laws, contract and foreign exchange regulations of every nation. The Bank for International Settlements says that 80% of central banks worldwide today are researching Cbdc and a number of pilot projects have been launched. China has taken a bit of a lead in the matter by the issuance of a digital yuan. It began its research in the matter in 2014 and it has distributed hundreds and thousands of packets of its digital currency in select cities since October 2020. The Bahamas, on the other hand, have already issued a digital currency called the Sand Dollar, whose prototype was introduced by Bahamas in 2019 and it was made fully operational and deployed by October 2020. Sweden began testing its e-krona from 2020 and it will finalize its rollout plan from March 2022 onwards, and its experiment so far has been very successful. The other nations in the Cbdc game are Nigeria, Marshall Islands and the East Caribbean nations like Antigua, Barbuda, Grenada and St. Kitts, etc. So, this is about the present scene of CbdCs worldwide. The second question, why has Cbdc become a priority for central banks and governments worldwide today? Just because blockchain technology has been deployed does not mean that CbdCs must be issued. A wake-up call actually came for central banks worldwide when a consortium led by Facebook announced a couple of years ago that it will create a digital currency. While they did not do so, it raised a serious issue about the very stability of the payments system of a nation in case the issuer of the digital currency itself went bust. Imagine a scenario where the central bank of a country goes bust and the entire payment system crashes. That is what was the scare that central banks got. The credibility and stability of the economy is founded on the dependability of its payment system through which transactions take place, and thus protecting the integrity of the payment system is an even more essential reason for the prudential regulation of banks than even the goal of protection of depositors from losses. As we said, if the payment system crashes, the economy instantly crashes, and that needs to be looked into with topmost priority. That explains why it is only governments that issue the nation's currency through the central banks worldwide and not through any private party, however strong it be. With the privately issued cryptos threatening to become a digital currency for payment transactions, the worried governments need to issue CBDCs to checkmate the rise of unregulated cryptos, which can become a threat to the entire market and the economy. The next question: what are the essential features of a CBDC? A CBDC is a currency issued in a digital form and is thus a legal tender. It is a credible alternate for a cashless society. The second, while CBDC is issued in digital form, physical notes and coins can certainly be exchanged and converted into CBDC. And with the issuance of CBDC, it's not that physical notes and coins are not going to be printed and circulated. The third, since it is legally acknowledged as a form of payment, a CBDC acts as a direct claim on the Reserve Bank on the Government of India. Like any currency note, its value does not erode and it must be honored by the RBI, by the government. The next, being in a digital form, the CBDC is thus universally accessible. Like in the case of physical currency, the central bank, which is the Reserve Bank, is also to be the issuer of the CBDC and it will be responsible for honoring it at all times. The value of CBDC does not deplete and there is no volatility in its pricing. Just as a currency note of rupees 100 remains rupees 100, so is the case with the CBDC, which is merely currency in a digital format. The next question: how does crypto differ from a CBDC? The first point of difference: a crypto is a decentralized digital item with no central party as its issuer or regulator, unlike in the case of CBDC, which is government issued and regulated. A crypto thus does not represent any person's debt, liability or obligation, and it can become worthless if there is no demand for it. Since there is no regulator or statutory issuer of the crypto, it is not money, and thus no banking entity or regulator can treat private virtual currencies as an asset or a liability, or even as a mode or medium of transaction. Further, a crypto is thus not a legal tender, and there is no guarantee that it will be honored. Unlike a CBDC, it does not constitute a claim on the government and is thus no substitute for a currency. The next question is: how does a CBDC differ from other forms of digital payment? After all, both of them are in a digital format. When you make digital payments through any mode, whether by way of credit card, debit card, NEFT, RTGS, etc., you do it through an intermediary which holds, receives, and pays money on your behalf. The payer and the payee thus do not directly transact with each other in any of these modes of payment. There is always the risk of failure of the intermediary who's in between, which is failure of the banks or failure of whoever is holding, receiving, and paying money on your behalf. A CBDC, on the other hand, needs no intermediary in between the payer and the payee, like it happens in the case of any cash transaction, where the two parties, which is the receiver and the giver, directly transact with each other with no risk of an intermediary failing and also no risk of an intermediary in between whatsoever. Further, the risk and responsibility of CBDC is therefore directly on the Reserve Bank of India, which must honor the payment, and since there is no intermediary in between, the CBDC transaction is instant and immediate. Therefore, unlike in the case of a digital payment, where an intermediary holds and transacts on your behalf, in the case of CBDC, you hold your own currency in your own wallet and you make and receive your payments directly. Your money in CBDC is with you always. So what is the emerging larger picture of the CBDC scene in India? The Reserve Bank says that it will provide a safe, robust and convenient alternate to physical cash, and that the CBDC will possibly lead to a more efficient, robust, trusted and regulated legal tender-based payment system options. The fact is that CBDC is in an experimental and nascent stage worldwide. Its pros and cons are known theoretically, but only its actual rollout and widespread usage will tell us its final fate and to what extent it has succeeded in being an alternate or also in replacing physical currency to a certain extent. For the over-enthusiastic tech geeks who think that the advent of CBDC will make the usage of paper money obsolete, it is worth noting that despite the increasing number and volume of digital payments worldwide, the physical paper dollar notes in circulation have doubled in the last decade. and so has been the trajectory of euros and the Indian rupee too, whose volumes have shot up despite increasing digitization and demonetization. So let the CBDC come, but paper currency is going to remain. Human behavior, human acceptance, human nature is not going to change merely because technology is getting you another form of currency. This is Akhilesh Bhargava signing off till we meet again. Namaskar.